Hey, what's going on everybody? My name's Jose from deepdatainvesting.com, and I know I got this afro thing, but hey, we're all in quarantine and I don't want to go to a barbershop and cut my hair, so I'll just be dealing with this. All right, so what I want to talk about today is the different options that you have as an investor or trader. We're all aware of what a stock is. A stock is pretty much just a little piece of a company that you can buy, and you profit from the price of the value of the stock appreciating over time. So I want to talk about the different options as well. So the first one on the list are mutual funds. So a mutual fund is like a basket full of different stocks and bonds, securities, different assets that are available in a portfolio that is being actively managed by professionals. This is great for investors that want to diversify themselves and want to take less risk in their investments. So the diversification helps with that. Now, since these mutual funds are being actively managed by professionals, that means you're gonna be paying some kind of fee. So also with that, there might be a minimum investment requirement. So next on the list are ETFs. Now, an ETF is an exchange traded fund, and they're very similar to what a mutual fund is in that it's a basket full of different stocks and bonds and different securities that are passively being managed. So unlike a mutual fund, there are no active roles in adjusting the portfolio with that. So that means that there are no fees associated with the ETFs other than like commissions and other different fees that the brokerages might have for you, but they are being traded like stocks in the market. So you can say that ETFs are a bit more liquid than what you have with a mutual fund, because in a mutual fund there might be different penalties that you might suffer from if you withdraw your money early. So I was using the word bond in our previous examples. So a bond is actually another option that you have as an investor. A bond is pretty much a loan to either a government entity or a corporation. So the way you profit from these bonds are from the interest that you accumulate from the principal that you're lending out to the corporations or government entities. So bonds are perfect for people that want to take less risk from their investments. It doesn't mean that bonds are risk-less, but they do offer much more security than, say, stocks. All right, so the last one on our list is options contracts. So an options contract is an agreement between two parties with a potential transaction during this time. So in a contract, there is an expiration date where the buyer has the option to buy that particular asset. So these contracts usually cover 100 shares of that particular asset. And there are two types. There's a call option and then there's a put option. Just to simplify this example, I'll just be using a call option. So what basically happens with these option contracts is the writer or seller and the buyer agree upon some particular price in the future to buy that particular asset. So during this length of time before the contract expires, the buyer has the ability to buy that particular asset. In return, in this initial agreement, the buyer actually pays the seller some kind of premium or to compensate for that agreement. So this means that for the length of this contract, the seller cannot sell his assets because there's this contract between the two parties. So let's say that there's an asset that costs $10 and the buyer agrees to buy this asset for $50 in the future. Okay, so let's say that during this time in which the contract is active, the asset actually goes above $50. The seller can't sell it to anybody else other than the buyer in the agreement. If the buyer agrees to buy the asset at $50, he can profit from that by selling it at the market price. So options are a little bit more complicated, and you can read more about it and do some more research. All right, so that's it for today. If you want to learn more about these different points, go ahead and subscribe to our newsletter where you can read more about these different options. All right, so go ahead and subscribe, leave a comment, leave a like, whatever. All right, you guys have a good one.